Welcome to Financial Investing Radio, where you'll learn the secrets for consistent, high-probability returns in the financial markets for additional income to change your life. Grant applies consistent, high-probability trading systems for the financial markets. He's only recently started sharing these tried and true market secrets. As a gift to listeners, Grant is offering his roadmap to high-probability financial control. Go to financialinvestingradio.com and download yours today. Now, here's your host and trading veteran, Grant Larson.
Hey everybody, this is Grant. Welcome to another episode of Financial Investing Radio. So over the years, I have seen some long-term investors, certainly seen day traders, and of course everyone in between both make money and of course lose money. I was thinking about, what are the key elements that separate the winners, versus those that are taking a loss. Now, before I get to this list, right, there's 5 things that I want to point out to you. In fact, it kind of sounds like the Magnificent Seven, right? Anyway, before I do that, there's actually 2 lists that I want to share with you, all right? So here's the first list, okay? The first list is a non-negotiable list. It has 3 items on it. And what I've seen over the years is that if an investor or a trader does not have these 3 things on this list, it's non-negotiable. Now, of course, it doesn't mean someone can't go ahead and invest. Certainly they can. But what happens is the probability drops significantly very fast if these top 3 things are not yet acquired. You ready? Here it is. Number 1, discipline. Number 2, the ability to take a loss. And number 3, mindset. Now, of course, we've heard these before, but I want to break these down just for a minute. In fact, like I said, if you don't have these first 3 under control, don't get into investing or trading, right? In fact, get some mentoring on these before you get into some of the technical details, because the probabilities of you losing your money earlier rather than later goes up significantly. So you got to get a really great mentor. And there are great mentors, everything from, the stocks and options and futures to real estate and so forth. There's some really great mentors out there. So get one. All right, here we go. Number 1, discipline. As we know, this is obviously crucial, but what it does is it requires, in fact, it implies that there's an investing plan, right? In other words, there's a set of rules and a discipline to invest or trade the plan. So think back to some of the people that I've interviewed here over the last few months, right? One of them, Zach Morrow, right? He ended up having a set of rules that were critical for the real estate markets that he invested in. He and his company invest in. Shaman, right? When I talked to her and she's working on the mobile home stuff, they have their set of rules that they follow as well. Or whether you're trading stocks for long term, right? You want to do a buy and hold strategy for a long period of time. The point is you have a plan with a set of rules and the discipline. There's the key word, to invest or to trade the plan. But see, this is generally where the human weakness or the emotion gets in, right? All the planning that you do, it's all wonderful, but the ability, good intentions aside, the ability to actually stay with the plan and go with it often falls to the wayside. So this is number 1. We got to have discipline. Number 2, the ability to take a loss. Holy smokes. This is actually one of the more difficult ones, right? It's related to discipline, no doubt, but because it's so important, I separated it. See, it's this hurdle that we have to cross, right? And the key, of course, is we have to have strong protection for our capital, right? It's always about protecting the capital and taking a loss within reason, within the bounds of risk management. That's okay. What's not okay is when either we don't have a risk management plan up front or we ignore that risk management plan. We get in a situation and we think, well, I'll just keep, holding on to it. In fact, I had a friend that went through that. This is a number of years ago now, but had a bunch of stocks from a company. And anyway, followed it all the way down from, he had made 250 grand on the stocks. He ended up watching it go all the way down to 0 because he couldn't take a loss. He was unable to say, well, I'm going to get out at 200, all right? Okay, I take a 50 grand loss. Well, I'll hold till 150. I'll hold till 100. I'll hold till 50. He drove it all the way down to 0. So, all right, the ability to take loss, but that implies 2 things. One, you got a good risk management strategy. And then second, you have the discipline to follow it. All right. Again, we're just on the first list. These are the non-negotiable items on the list. First, discipline. Second, the ability to take a loss. And if you don't have either of those, do a lot of practicing with a lot of fake money before you start throwing your hard-earned capital at it. Number three, and it's sort of the topic du jour, you hear a lot about it, is mindset. So, of course, you have to have the mindset of an investor or a trader, and you have to offload some past baggage. Now, here's what I've seen with this. Sometimes this is discovered along the way, right? It might take a few times before you realize, why do I keep doing that? In fact, remember I interviewed Todd Gaster. You got to go look at his episode again. He shared an experience, if I recall. He would go make money in some financial market. He'd get up and he'd earn enough money and start making a lot of money. Then he'd turn around and lose it all. And then he'd do it again, and then again, and again. And what he discovered is over time, he realized something was going on in his mindset that was preventing him from getting to the next level. And it was a fear of actually making a lot of money. And it came from some of the wiring that he got when he was younger. Once he recognized it and is able to unravel that then opened up a lot greater opportunities for him. So, okay, that's the first list. The first list is non-negotiable. It's discipline, the ability to take a loss, and then mindset. All right, let's get to the second list. See, most of the time we want to talk about the second list, right? This second list of 5 things, all right, I'm assuming the non-negotiable 3 are taken care of, all right? Because they're the rite of passage. Have I said that enough times? All right, here we go. On this second list. So the second list is really a set of technical items that end up qualifying the investing or the trading opportunity, right? Now, whether you're a long-term, buy and hold investor, I don't care if it's real estate or stocks or whatever it is, whether you're long-term or whether you're short-term, right? This list applies. Now, what's key is, they're not listed in any given order, so I don't intend to describe them in terms of priority. Number 1, I'm going to walk through the list here real quick. Number 1, a multi-time frame momentum. Whoa, what does that mean? Number 2, multi-time frame probability. Number 3, related markets probability. Number 4, market structure location. And then number 5, time. So let me just say something about each of these. So number 1, so on the multi-time frame momentum, so usually, ultimately for most of us, there are larger forces than us that are acting on any given market, all right? And so it's crucial to know the level of participation of those who have the bigger influence on the market and how fast they're pushing it. It's that simple. And if you don't know on the bigger time frames, the forces that are involved and who else is in that market, then don't be in the market, right? Because you're going to be a pawn and you're going to lose your money. Second, multi-time frame probability. So this is similar to momentum, but we also need to understand the probability of a given price location on multiple time frames, right? So we need to understand, based on where it sits right now, looking at other time frames that are above us, what are the probabilities of it continuing to move in a certain direction? Number 3, so this one is the related market probability. Now, if we're going to invest in a market, right, we need to spend the time and the energy to understand related markets and how they're behaving. So here's an overly simple example that everyone already knows, right? But just to make the point, look, when gasoline decreases in price, what industries are inversely correlated? Okay, so that's a related market. So the answer is, well, airlines, transportation, and so forth. So simply said, we got to know the related markets of what it is that we're investing in or trading in, and we have to understand their probabilities in their direction. All right, number 4, market structure location. So it's important to note that in the end, it's momentum and probability that create market structure. Right, so the popular locations of pricing to invest, or the popular prices, where prices are avoided, right? It's momentum and probability that gets those prices into those pricing locations. So, market pricing is actually a byproduct of those. So, meaning it's a byproduct of momentum and of probability. Can I say that? All right. So, in general, the market structure, it's a byproduct of momentum and probability. I thought I'd try to say that one more time. Here we go. Number 5, last but not least in any stretch of the imagination. It's called time. So this is a critical one that's often overlooked. So sometimes it's expressed in seasonality, right? So for example, the example I gave on gasoline, right? It may increase or decrease at certain times of the year. But timing also expresses itself in other markets in different ways. So it's important to know the timing. So for instance, let's say it was a stock, right? So they'll have their earnings report, right, every quarter or whatever it is. You have to know about timing and the impact of timing on whatever that market is, all right? So it's critical to understand that. So to say it another way, these 5 items that I just listed, the 5 items are multi-time frame momentum, multi-time frame probability, related market probability, market structure, location, and time. All of those, we could just use the word context, right? It helps, we have to know the market's context. And the 5 things I mentioned here will help with that. So to summarize, we need 2 lists. 1, we need the non-negotiable 3-item list. So don't proceed to go or collect 200, right, to use a monopoly analogy, until you've made significant progress on those. Don't even get wrapped up on the second list until you've practiced with that, at least with fake money, all right? And then number 2, it's the technicals list, right? That gets the context of your market, right, to benefit your investing or your trading decision. All right, everybody, that's it. Thanks for joining, and until next time, get your 2 lists.
Thank you for joining Grant on Financial Investing Radio. Remember to subscribe and leave feedback. Don't forget to download your free roadmap to high probability financial control before you make an investment decision. Visit financialinvestingradio.com now.